The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And we're going to get right into the Japanese yen. Japanese yen USD cross. We talked a lot about this 105, 106 area. This is the long-term weekly on the yen. And just to get right into it today, guys, we're there. So this is a place, again, we don't have a lot of confirmation, a lot of cooperation, and some other even lower time frame profiles starting to show any hints of, you know, the ability for us to, and in fact, I'm going to show the sell structure really quick. I'm going to go to the Forex section. This is a trade I've been watching a lot. waiting. Sometimes it's hard to wait, but as you can see, we just got, you know, red across the board here. Not a lot of confirmation, any new profiles, even getting, you know, a new profile and even being within the balanced area on the daily. It's still a little bit of a waiting game here. There's no reason to just kind of, you know, pick a target from the past and just focus on it, back the truck up. Let's just wait until we get some confirmations on some other time frame profiles, and or excuse me, lower time frame profiles. But we're in the vicinity where we were talking about not really getting mixed up too much into these gyrations that happened a week or two ago, and just waiting until the air went out of this thing. Finally, you've got some, you know, Australian dollar Japanese cross is just going crazy today. I don't know if you guys have seen that. We're going to take a look across the board as far as some other currencies go relative to the dollar. I'm actually surprised that the Aussie dollar, with the lowest rate cuts ever in the history of that country, has not really come off farther. So, but, you know, again, this is relative to the dollar. What we're looking at now, the Aussie cross with the dollar. And as we look at this, you know, not looking terribly well here on the daily, but you know, again, I like how we've got a support area again to play around with this thing. Again, the long-term trade, when you have those yellow profiles bars appearing in the scanner, you've got, let's just go back to this. You'll see these yellow peelbacks happening. Wow, we got the Brazil USD cross in there. John from Philadelphia, it's in the scanner now. See, John from Philadelphia sent an email in, really just incredible email after we had that talk about the things going on in Brazil with the grain situation, and that particular currency we just slotted in there. So again, you've got access to that now. Michael Ceballos is one of the guys that really does a great job for us in the back end. If you guys send something to helpdesk@tasmarketprofile.com or just send me an email directly, we'll try to get these things in here. We've got server space. We've got the ability to add more servers. Unfortunately, a lot of times, you know, when we add a lot of instruments at one time, we'll have to add an entire new server. This thing's crunching a lot of numbers to calculate all these things historically and output real-time profiles. So, but we're very, very open to adding things. So, you know, make sure you send them in. We might not get them in there immediately, but we'll schedule it. Put it that way. And especially if we have to have a new server online, we'll let you know when we're going to do that. The big support area, I mean, I like how the Aussie dollar is acting, actually, and I like how this 74.81 is very near to that 74.39.40 from before, that big area that we kind of used as a launching pad to get above profiles. We were looking at this, if you remember, of starting to buy this above 69, or excuse me, above 71.69, and that was a little bit of divergent situation going on here, lower lows, and we talked about that. And then when we cleared this area, that was just icing on the cake. But you've got a support area again right now, 74.81. I think you can wait until the kind of market comes to you. You've got a long-term inflection point there about 70 pips lower at this stage, and that's the way I'm looking at the Aussie dollar. Taking a look at the what else do I have here? Yen. Going to wait for some confidence on that. Euro, very dollar dependent. This is the deal with the euro. 114.64.65, 114.25. Why are those two numbers important? We're going to go right into the scanner. I'm just looking back at the den, at the hate chat. I'm just kidding, guys. You're welcome. We try to make things right as far as what you guys want to see, and we're always open to suggestions. By the way, not only send in requests for different instruments that need to be statically put in here. Anytime that you've got a feature within the scanner that just is not doing what you want it to do, or something else you'd like to see, we've had a lot of requests for alerts lately. We're working on those. We built an entire signals version for some folks in the Middle East. So we've got the programmers, and we've got the ability to kind of make adjustments to make the scanner as personable, user-friendly as possible. So don't be shy to send in suggestions. And what we were looking at when we go to the euro, I'm going to go down here to the EUR-USD, is you'll see the sell structure. I'm going to show you the major inflection points that we've just crossed, 114.65, rounded off 114.25.26. There's the level of the market. So what I want to do here is just go back to my e-signal charts and look at what's happened. The dollar not really showing any end in sight on the downside, and we'll talk about that in a little bit. But there's that 114.64. This is our weekly. And I got it faked out here before. That's what stops are for. Now, we talked about the possibility literally of this thing going into 125, Joey and I want to talk about that when Joey's going to come on actually at around 8:30 today. And here's the daily. We're going to talk about this euro trade, the yen trade, what's going on in the Hang Seng and Nikkei. But there's that daily breakout now too. So now you've got a big floor that you can count on for any type of pullbacks. And I don't even know if we're going to get a pullback around 114.25, 114.64.65. Now, why is it so important? What's going on now? We've cleared profiles before, new balanced area up here, a little bit of a kind of a waiting game to see what's going to happen there. Found some support on our dailies. But as we look at this now, this is what we call a hole in the marketplace between this 116 general area and 125. We're going to talk about that a little bit when we come back, folks, how important that is.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're kind of talking about the euro at the end there, and quite a few other things, alerts on the scanner. We're going to talk about that a little bit. Here's the whole, these holes in the marketplace. When prices get into these holes, I'm just kind of telling you from just what we've noticed and what the theory is here. Prices move really quickly in these holes. Especially from the past. So if we get up into this 116 area, there's a lot of congestion around here. There's no doubt about that. You've got a floor now, a support area, big time support around 114, 25, 65. Any retraces back into that, I think you got to take a hard look at it. Keep your eye on the dollar. But these holes in the marketplace, a lot of times price action will just move through it like butter, or butter, as they said on Saturday Night Live. Be aware of that hole, top of that hole. Joey and I talked about before about 125. As crazy as that sounds, a euro becoming stronger against a dollar, it is what it is. Let's take a look at the. We're going to look at this Brazilian USD cross. I'm going to look at the chart on this and the scanner. Don't have that on. We just put that in. Let me see what's going on. Well, we got it on everything else in the world. Let me make a note of that. BRLUSD. BRLUSD. Let me see if we can get this up. I'm going to have to look into that, John from Philadelphia. I don't exactly know the symbol in E-signal, and we're having a little bit of an issue there on the scanner. We just put that in. Let me make a note of that. Oh. Okay. All right. We're going to take a look at the Canadian dollar while we're on the currency scene. Again, we're always looking for, when's it time to take the trade off on the current trend. The breakdown, obviously, getting below weekly profiles for the first. This is kind of like that Apple scene for a long time. And crude oil obviously helped this situation, the devaluation of the Canadian dollar. But those breaks below 137 and some change then you're looking to sell resistance on the long term. There was a chance to take some weight off there. We obviously broke down again and retraced back up, if you can see that. And long-term trade now, you've got to kind of take this for what it's worth. We've got a new profile attempting to appear. You got to take a look at crude oil when it comes to looking at this trade. So let's just kind of reference crude really quick. We'll go back to it in a larger way a little bit later. But, crude pulling back. I mean, I think just the stabilization of crude oil is, boded well for that currency and that country in general. There's the daily. Here's the weekly on crude on the May contract. Last week we used 42.06 as support. That's still huge support. And, anytime between 42, 43, that collection area, you may have another profile on the daily on the Canadian dollar, and therefore you may have some more resistance areas up top to sell. But right now, on an intermediate basis, going back to the Canadian dollar, you got a chance to take some of this off from the short side, or the valuation trade, taking some off when it comes to the Canadian dollar, just because you've got this yellow peel back happening. And as I look at the scanner, it's going to tell you that yellow peel back, it's kind of a target situation. It's not a reversal. Hey, let's go long the Canadian dollar. That's not what it's saying. It's just saying it's time to take some weight off, if not all of it, on an intermediate basis, and try to find better inflection points. Let the market come to you type scenario to put the trade back on, considering that this stays red on the weekly. So again, there's the Canadian dollar chart in there. And to answer your question about the alerts, we're working on them. What I always wanted to be able to have was in a custom portfolio list in the scanner, and we're playing around with this, be able to just kind of know things that are happening with the usual suspects that I want to keep my eye on, that are in a certain kind of bank of instruments saved. But we're also putting it on the broad market. These things right here that we have, and I'm going to go back to my dashboard just to remind you, these custom sorts are not going to throw out they're going to put things on your radar screen. They're not going to throw out, like, for instance, the market bounced a little bit yesterday. Let's kind of take a look at what's been breaking down. These are the only ones considered breaking down by theory of what this, little thing states. So, and these things dynamically update. So if you keep this sort up, you'll see these things happen in real time, but you can always go back to them. Here's stocks that were in an uptrend that are kind of starting to reverse. And these are kind of longer term reversal situations. Hewlett Packard, let's just I'll show you how this works. See, there's the daily on Hewlett Packard. There's the breakdown by definition, getting below profiles on the daily. Here's the weekly. You'd have targets initially of 1155 down south, and your resistance now is 1296. I know that's not that's a trading type situation right now, but it puts things on your radar screen. And if you keep these up and you look for, you can do custom sorts too. Going to the dashboard, we spent so much time on this, guys. You really should use it. You can kind of say, we're in a downtrend. Oh, well, we'll cover the S&Ps in just a little bit, but let's just say you're looking for, we're not in a downtrend right now, by the way, but you're looking for things that are trading above profiles, but reaching just the top of our daily. I mean, I'm just picking out one thing here. So these are stocks that are sitting, at the top of profiles. Let's just look at Archer Daniels Midland just to kind of prove a point here. Here's the weekly, there's the daily. We've obviously been kind of breaking above a profile recently. There's 3 weeks up. You've got big time support here at 38.82. We've been in a commodity rally lately. This thing's kind of sitting on the launching pad. You've got 38.58 sitting down below here, very similar to 38.82. So again, you've got a chance now. You've got a new profile. It may explore the entire fair auction, but right now we're right there. We might be breaking out And again, I just did this sort without a lot of rhyme or reason to do it. I just wanted to show you that you can, and when new candidates come in here, they'll immediately dynamically update. No comments, nobody cares. Okay. As usual. Let's take a look at Apple. So as we look at Apple, just while we're looking at the scanner, this is something we want to talk about a little bit before we talk about the S&Ps and the NASDAQ today in the notes. As we've talked about, no end in sight in this, no reason to start picking bottoms yet. We're going to talk about that a little bit more when we come back from break, and we'll have Joey Jung on with us from Hong Kong.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we've got Joey Jung on with us. Joey, you there?
Hello? Hello?
Hello? Yeah, hey.
Yeah. Hey.
How are you, my friend?
Good. I'm going to put on the video.
Great. Beyonce, that video? What are you talking about?
Hold on.
All right. Okay, so, yeah, the reason I wanted to talk to you today is I want to talk
Can
about
they see the video?
I'm not sure. Maybe maybe they can, maybe they can. I can't really see that from here.
Maddie, say hi to everybody.
Hi.
It's late at night there where Joey's at, and we're happy to have him. And it's
This is my son Matthew. How old are you?
9.
He's 9. He's turning 10 in a few days, right, Maddie?
Yeah.
Good. And he's already learning how to read charts, right? Oh, good.
oh my goodness, oh my
Yeah.
goodness.
And he knows all the currency pairs. Okay. Bye, Matt.
Well, listen. What's your thoughts on the yen? I mean, because I've talked about that a little bit. We're kind of down here at that 105, 106 area. Oh yeah, I just saw you on the tube. Great, it's good. It's great to see you.
Good to see you too. Yeah. So the yen, dollar yen. I have a buy order in there at 104.88. Now I've been out of this trade for a long time, and in retrospect, I have been shorting it.
Right, right.
But I figure, right around the 105 area, there's a lot of support.
Right.
And you're trying to catch a falling knife, but at this point, you don't want to be shorting it at this point. And between the 102, 105 area, there's actually a lot of support. So,
Right.
It's come down from 122. It's
Right.
a long way. And the other thing is, I guess the dollar index is right around, it's fallen slightly below the support. The support was somewhere around 93.50, 93.20, and it's now 92 and change. So we've actually fallen below the support on the dollar index. So
Right. I agree.
if the dollar index kind of stays down here, it could actually go lower. So, it's one of those catch a falling knife trades that you have to have some discipline on, because if the dollar index actually finishes this week below, this kind of 92 level, then it really means we've broken the support on a weekly basis, and that's not good for the dollar.
Right. Yeah, I don't see any end really here yet in the dollar.
I think because the yen led the whole move down in the dollar, the yen strength, then maybe the euro would actually start catching up. So then I'm probably expecting more euro move at than a yen move. And if that's the case, then there's going to be some pressure put on the equity markets in Europe.
Right.
Because obviously
you mean just the repricing effect of that?
Yeah, I mean, obviously, if you think about the Japanese yen, dollar yen is a very the Japanese economy is an export-based economy. The German economy is an export-based economy. So when the dollar yen went down and the yen strengthened, then the Nikkei, really took a hit. And
Right.
the same thing can be said about, the further strengthening in the euro. And if you look at the DAX index, the Euro Stocks index, it's actually a lower low on MACD, and also breaking support on the TAS,
Around
the TAS
around
on
10
fair lows as well.
Around 10,000 on the DAX.
Yeah. So
Yeah,
it's broken. Yeah, if you look at daily.
I was looking at that earlier. Yeah, you're right.
Yeah. So if so we have some divergence going on the MACDs, and on some of the other indicators you'll see some divergence, stochastics, etc. And then and this is being confirmed by a breakdown in the TAS unfair low as well. So so it's all kind of looking that way, and so you could have a catch up in the euro strength to the yen strength.
Right.
And that would push the dollar index even lower.
That is a super volatile pair too. You've traded that, I'm assuming.
Yeah, it's not fun trading.
Okay, so to sum it up on the yen, we're still thinking about this 105. It's going to be like catching a falling knife, what Joey said. Again, the Japanese, I mean, you're over there. We both understand what the headwinds are for that country. And, the valuation of that currency, I actually can't believe they've allowed it to even become this strong, if you know what I mean. But
well, I think they kind of run out of bullets, and they kind of wanted to save it for another day.
Okay.
They do have more bullets. Okay, it's not that they don't have any more bullets. They do have more bullets, and I don't want to be the guy, left partying, saying, "Hey, great, I have such a huge gain on my short in dollar yen." And then I wake up in the morning and realize that the BOJ came in to intervene, and all those profits are gone,
right,
in an instant. So,
right.
I don't want to be that guy. I want to be the guy who, cashes in at this point and,
right.
Goes and, buys a Maserati, or the Tesla in this case.
Right.
I don't want to be the guy left holding, trying for that extra, percent left in the move, and then potentially losing the whole thing plus more overnight, basically. Right. I mean, the Japanese government is always looking to do it, or any central bank is always looking to do it when it's least suspected, right?
Right.
So
well, there's two things. One of the ways to play this, guys, is just keep your stops in. Thank God currencies trade 24 hours a day, so you're not going to have a lot of gaps in this, except some major slippage if there's a massive announcement. But you'll still be able to get out of the trade. These order entry systems are pretty efficient these days. The other thing is, we talked about a trade on the S&Ps around that 2096, 2097 in that webinar that I did a couple of weeks ago, which is where we short the futures and buy in the money calls and just kind of hang out and wait for that thing to develop, not get shaken out of the trade. That might be appropriate for a situation like this. Buy the yen, buy some in the money puts, just sit tight. If it goes to hell in a handbasket, you're still covered. Joey, can you hang out?
Yeah.
Great. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and we've got Joey Jung still with us. And Joey, the next question is, where do these U.S. markets go? Looking a little heavy this morning.
Yeah, I think if you look at, tech is what led us up, right? So
Right.
at Amazon, Apple, all these, Google, all these major tech stocks had been on a roar, right? And they've all, Apple has broken down, Google has kind of broken down. So a lot of the leaders have broken down, and whenever you start seeing that, you got to start worrying.
Yeah. It's amazing that the market's held up as well as it has with those leaders breaking down, though.
That's right. That's right. So if you look at the breadth, the daily 240 and 60 yesterday turned all red. So they're kind of like right on the border right now.
Right.
So if
everything's kind of sitting on the cliff. Yeah.
If we have one more bad day, then you're basically gonna turn the whole tide over to a seller's market.
Right.
So yeah, I mean, a lot of things have kind of broken down. Amazon is the one that amazes, keeps on amazing anybody, because it just it's built such a strong business there.
Based on no profits.
Well, no. Which for years they've been building all these logistics centers and using all the profits to do so, but now.
Right.
Nobody else can compete with that. So, they've been building infrastructure, and they can continue to use the profits to build infrastructure. But at some point, they can say, at any quarter, we can, spend a little bit less, and then we'll be wildly profitable. And so, that company is between them, Google, and I still believe in Apple. I think Apple. I'm not on Apple right now because it's broken technical support, and they could have another quarter or so before they get their act together on new products and stuff.
Right.
And right now we're in a situation where the product cycle is just kind of they're in the middle of a product cycle, and there's nothing wrong with that. And people always say they're gonna can't deliver on the next product, and they always do. So it's not something to worry about. I think we're gonna be fine. But wait for the technicals to improve before I back it.
Right. Yeah, it always amazes me when I'm over there your way that not too many folks have Apples. I think last time I read a statistic, I think it was about 75-80% of the world has Android versus iOS.
Yeah, and even if you look at this, the Android conversion into Apple is huge.
Right.
and so there's a great quote from Tim Cook. He said, 5 years ago, the Chinese middle class was about 50 million people. 5 years from now, the Chinese middle class will be 500 million people. Okay, and India, India will be the most populous country by 2020 or 2022, and 50% of their population is going to be under 25 years old. So it's going to be a very young population that is growing, hugely. So those are the two markets that, the demographics is really favoring Apple. Now they have to get their product right to be able to address those markets.
And pricing.
And the pricing. So they have to actually come down in pricing and be able to, but they're not going for the lowest price, and they've never gone for the lowest price. Even when even when I was in school, the Macs were always 30% higher than the PCs, right?
Yeah.
But people bought it because it lasted, twice as long, and it worked 3 times better, so it was kind of worth it, right? Everybody who's used one realizes it's much better. So then eventually, I've had Android phone myself, and after a while, I've basically switched all my phones to and all my iPads, and now it's like full Apple.
Right. I remember, talking about the old days. I remember in high school, it was just mind blowing. So I think we had an Apple IIe or C or something, Macintosh. I forgot what it was. But it was an Apple. I mean, there was no alternative, and we could write a program in it. Like you could kind of have it you could program something to ask a question on the screen, like a DOS looking screen or Fox Pro or whatever type looking screen, and you could write a loop. This is how slow the processors and the memory were back then. You could write a loop that it would kind of be in a loop for about 1,000 times to pause before it asks the next question, because it took the computer that long to process an empty loop. It was wild, man. I mean, looking back on it, it was wild. At the time, we thought we discovered plutonium by mistake or something, But I mean, Amazon is astonishing, but it was amazing, the profit margins of that company. But yeah, like you said, they could kind of turn a wrench a different way, and raise their prices 0.05% or something, and nobody would blink an eye at it, and they would
would blink an eye, and it would be wildly profitable. And they had a great quarter this quarter, and that's what they did. They just exercised slight they did lower prices, I guess, and then they had a great quarter. But people look at quarter by quarter, but the business itself is building a great business, and this opportunity, Google as well, had a nice fall. This is a great buying opportunity, but am I necessarily buying here? No, because I think I'm looking at the overall market, and the overall market looks like it wants to turn. So, I wouldn't mind being, if you had to be long short, then yes, go long. In Amazon and Google,
right,
and even a Microsoft. Microsoft, you got Bomber out of there, so it's a much better company. So,
right. Well, the
new CEO has done wonders there.
The sheer action on the S&Ps, we talked about yesterday. The breadth was just kind of eerily. I've got the Nasdaq breadth right on. Let me go back to the S&Ps. The S&P breadth stayed, relatively positive. I mean, we had a little bit of a tenuous situation there for a while yesterday, but it bounced right off this 2060 area. But coming right back down to it from a classical technical analysis standpoint, it looks like it wants to just kind of stay at that inflection point, not stay away from it. And we may have a little bit of a sell-off like Joey talked about. Joey, thanks for coming on today, man.
Okay. All right.
All right, buddy.
Good
I'll talk to you after the show. Okay.
All right. Bye-bye.
Bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And I know we're a little bit of a mixed bag. We were talking about, breadth being this and that, and the S&P charts looking how they're looking. Looks a little heavy here. I might, you guys are probably seeing the same thing, but we're going to have to look and see if some of the breadth kind of gets crossed over on the daily. We've got a lot of stocks opening now. This thing's kind of gradually getting more towards negative territory. We're at the bottom of a profile, as the scanner's explicitly saying right there in the cell structure. Kind of ignore that yellow right now on the weekly, as we talked about yesterday. And, 2046 has already been visited on a kind of an intraday basis. But again, we may be testing that again pretty soon here. Taking a look at the 10-year, this is, I've been keeping my eye on this one again. I mean, it's just, buy support, buy breakouts on the 10-year. Block out the short side. Not expecting this thing to go to the moon, but it's seemingly now, again, this is kind of the easier trade, waiting for the 10-year to come support, waiting for the 10-year to break out, and trying to time the S&Ps. I just think you've got so much leverage on your side. By S&Ps go down or go sideways, bonds, notes go up, and the S&Ps go up, bonds kind of go sideways. So it's kind of an easy correlation there to it's a boring trade, but sometimes boring is good. All right, so I wanted to hit soybeans here really quick, the November contract. And again, we've talked about this general area here, 978, kind of waiting patiently. New profile appeared. Again, not a lot of people probably happy that we're short this product, as we had been talking about blocking out the short side for a long time. And then there were only one chance to get out, and that was it. And they have, been in a pain amplifier if they didn't get out at that point. But now we're making new highs. And again, don't see a lot of reasons to take the long trade off. I mean, here's the weekly on this. As far as cell structure goes, going back into the futures section and looking at November beans, here we go up top. I mean, again, this is one of those things where you're like, wow, why did I take the trade off early? I mean, there's not a lot of indications, and these 240s are kind of going to get wider and wider as far as a trailing stop, so to speak, to regulate the trade up. I'm going to pull this up right now. We had a little bit of a disturbance there, but then you were able to catch that major inflection point on the dailies. Again, new support now on the short terms, 10.17.5. All bets are off below 10 right now, and you'll probably have a new profile attempting to appear on the daily if we start getting down into that range. That will be kind of a reversal here. But right now, again, it's just kind of, if you wanted to lighten up and just kind of hang on and let this thing breathe higher, I don't see anything wrong with that. Okay, let's see if we got meal here. I don't think we have it in my list, but I know it's in the scanner. The July this is the July contract in soybeans on the scanner, but very similar on the charts on the November. Here's July meal. Again, similar situation. Let's see if we can get this up. Ouch. Yeah, I mean, similar situation. There's really, look at the 240s, how it's kind of regulated the trade up. I haven't looked at July meal in a while, but not a lot of reasons to take it off yet. Guys, you've been great. Thanks, Joey, for coming on. Stay tuned for Basil. He'll be filling in for Larry next hour. You'll thoroughly enjoy it. We'll pick it up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.